So, hello and good afternoon. Welcome to another episode of Weekly Outlook on Nasdaq and SP500. So, last week I did not post any outlook on these two assets because I was not looking to participate in trading the two assets. I explained the reason on my Telegram channel where I mentioned that I'm not trading because of the sale of that occurred on Friday when Trump mentioned something about tariffs, 10th of October. So I was not looking to trade that week because after that chaos, I expected some form of consolidation throughout that week, which is what we saw. So I did not trade US 100 or US 500 last week. But this week I am back and I'm looking to see quite some big ranges throughout the week, or at least 2 days in this week. I expect to see big moves, which I will be looking to capitalize on. So let's get into it, and we will start with the weekly chart. Just delete that. So what I want to do is so we'll start with the weekly chart because it is a weekly outlook. So let's see what we have. So last week you can see that price remained within the range of last week's trading, which was this low and this high. Price respected the 0.5 levels of which is the equilibrium of that price action. So body to body is what I will measure. You can see the price traded within the range of that week's range, body to body. So that's what we had. You can see that price respected the 0.5 level of that week's range, body to body, and price remained on the upper half of that range. So that told me that we are still bullish on these two assets, and I'm looking to trade longs throughout this week, or at least 2 days of this week. So let's get into it. Let me just clear that up. Was so looking at, as much as last week was not able to cross this range, so that will be our major buy side liquidity this week, which has actually formed some form of relative equal highs on Nasdaq, which we'll look at in a better view on the 4-hour chart and maybe the daily chart. But first of all, we can see that the week opened and it left a NWOG, which is what we call a new week opening gap. So we have a new week opening gap, which is also a new day opening gap on the lower time frame, which is the daily chart. You will notice that it is an NDOG as well as an NOG. So I will just mark it as a new week opening gap. So if we are bullish, what do I expect the new week opening gap to be? Because we are bullish, I expect the new week opening gap to be an anchor of the bullish price action that I expect to see throughout the week. So which means I will not want to see price refill it fully. I want to see price weak into it and maybe leave as fast as it can. If in case price does come and rebalances it on a daily chart, it will have invalidated my bullish bias of the week. So let's go to the daily chart and talk more about the levels I want to see being respected and the price action that I want to observe throughout the week. So you can see it's still a new day opening up because this was Friday and then this was Monday, but because it has occurred on a Monday, we will refer to it as an NOG, which is a new week opening up. So Just pull this back right here. Looking at that, we can see that Monday, this was Monday's price action. So just a minute. So looking at what Monday did, we can see that on Monday, yesterday, we swept that buy side liquidity, which is a minor buy side. We swept that. Where is it? I want to mark it as BSL, which has already been swept. So we swept that, and we did the same on Nasdaq. We had that sweep, and we did close above it. So that indicates that price action, studying the candles, we can see that price action on a higher time frame wants to continue trading bullishly, and we might be targeting the all-time highs and maybe higher. So this Monday's trading actually it gives me a layout of what price wants to do throughout the week. So that is why I don't trade on Mondays. If this is not your first time listening to my weekly outlooks, you have heard me say that severally. So that is what Monday did. It has confirmed that we are going to be bullish. So you can see that I have marked these two lows right here. They are relative equal lows, and on this other asset we had a lower low form, but on Nasdaq price rejected that zone. So that confirms my bias, and this becomes an SMT. So it's a smart money divergence, which is an indication that price wants to trade higher. So SMT, or we can just mark it as relative equal loss or something like that. So you can see that after the SMT formed, price went ahead and swept the high of last week's consolidation, because last week's consolidation was ranging from Tuesday's low to Thursday's high, and then on Friday we had this sweep. Uh, we had this shallow sweep on Nasdaq, and we had a deep sweep of that low on US 500, and after which price reversed and took this buy side liquidity. So every time you have a consolidation, so every time you have such a consolidation, for example, you have this, have this, have this low, this high. So every time you have such a consolidation, so this is just an example that I'm using to explain. So every time you have such a consolidation, you just mark the lowest low of that range and the highest of that range. And as soon as you break one side of that consolidation, you expect a reversal to occur, and then you can continue to the downside. So what we had in this price action is the opposite of this. We swept the low of that consolidation area. So the low was Tuesday's low, so we swept it on Friday, and then price yesterday on Monday, it completed the other side of that price action, which is now to continue to the real move. So this is just a fake out. Okay, so uh, those are just confluences to support my bullish bias. So I will mark this as a change in state of delivery or a market structure shift, whichever way you want to call it. But for me, I will label it as a change in state of delivery on a daily time frame. So we already have that one, and this is the last down close candle, but I would like to label this one because it is the swing that has been swept on both assets. So yes, this becomes my daily change in state of delivery within this range. And As soon as I've done that, now I can go down to the 4-hour time frame where I will be looking at those levels on a lower time frame. So we are now zooming in. We started from the weekly chart to the daily chart. Now we are in the 1-hour chart. We have our SMT marked on both assets. Let me just bring this back inside this range. Okay, so you can see that we are now zooming to lower time frames and we are adding to the confluences. So when I look left of the chart, what I notice is that we have relative equal highs right here. We have relative equal highs, so that can be a good draw on liquidity, as well as an it is a good draw on liquidity, and it's also a point where we will be breaking out of the all-time high, and I expect price to continue rallying to the upside. So on the 4-hour chart, what I notice is that we have 4-hour fair value gaps right here. So after the daily change in state of delivery, price displaced yesterday, which was on Monday. Yes, so you can see that which occurred during the New York AM session. So we have this big fair value gap right here. So we have that, and I'll just use another color. I just use gray. So we have that, and because we are now in the lower time frames, I want to draw a gun box to mark last week's and the current dealing range that we are in, so that we can observe more levels on that time frame. So we have that. We have Friday's low, which was the lowest price went on during last week's price action, and we have the current high. So that is our dealing range, and you will notice that this fair value gap, let me just mark it in another color so that we can differentiate it. Okay, yes. So you will notice that this gap, which we can label as our displacement gap or our breakaway gap, it formed above the 75% level. So it becomes more of a displacement gap or a breakaway gap rather than a fair value gap. So I want to see it anchor higher prices, probably today and tomorrow, or maybe even throughout the week, but we will observe that as the week goes by. But I want to see price action respect these levels before we even get to the new week opening gap that we talked about. Remember, I said that I want to see the new week opening gap support price to the upside. So that is my first PDRA, and then now I have this breakaway gap that has formed above the 75% level. So I also expect it to anchor price to the upside. So that is what I am looking at on the 4-hour chart. So going into the AM session, I will be observing those levels. We can see that price has been consolidating from the midnight open. So I will mark the midnight open with a, let me just delete the dealing range because I have already explained it. So what I'm left of observing is this fair value gap. Let's use that one. So I want to see prices reaction to these zones, and that is what I will be observing probably today and tomorrow, if we will not have broken out of this range, the relative equal highs. So if this price action was to hold, this particular price action, I would want to enter longs after we form a change in state of delivery on these relative equal highs, because it marks a higher zone of some form of mitigation block. So let's just talk about that. So after these sweeps, this becomes some form of mitigation block, or yes, because we retested the order blocks that were lower in price action when you look at higher time frames. I do not want to go deep into that because it might confuse the beginners who might be watching. So we retested these levels, which were order blocks or maybe weekly changes in state of delivery. So this becomes some form of propulsion block. So as soon as we leave that, I would like to enter longs and ride it higher. So enough of that. Let's go back to the 1 hour chart where I was explaining if this price action was to hold as it is right now, if this fair value gap was to hold price to the upside, I would want to see a change in state of delivery from at 25 202 around those areas. So and then I will take longs with my stop loss on this swing low, which is the 4 a.m. low, a London session low. That is a high probability setup for longs because the low has formed during the London kill zone. So but uh, it's still early to say because we don't know what the New York AM session will do. So that was just a scenario where this particular price action holds. So that is what I'm looking at, and now I will be waiting for the 8:30 a.m. open and the 9:30 a.m. open, after which I will be looking for long positions. If price gives me bearish signals, I will not be taking that because it does not align with my bias today, and I, like I've always mentioned, I do not like to be trading the retracement. So what I want to mark is the midnight open using a horizontal line. So we will be observing how price reacts to that, and then after the 9:30 open, I will also mark it with another horizontal line and observe how price reacts to those levels. So this is my midnight open. So we are currently trading below the midnight open, uh, which is another confluence for bullish price action to be expected later in the day, especially after the New York New York equities open. So basically on bullish days, what you expect is that after the midnight open, price will trade lower, maybe grab some liquidity or sweep some form of liquidity. So in this case, you can notice that we have swept most of the PM session lows, and maybe we have swept most of the Asian session lows or the Asian session range, and that is the kind of price action you want to see on a bullish day. So price opens during midnight, sweeps previous session liquidity, which we have done right here. We have also retested this fair value gap right here, and then maybe we can get a displacement to the upside. So I will be observing the midnight open level and this fair value gap. And I think that is all for the technical analysis. So a quick look at the fundamentals. We have quite a clean week because today and tomorrow, which is Tuesday, October 21st, and Wednesday, October 22nd, we do not have any high impact or medium impact news. So we should be having a smooth price action today and tomorrow. And then on Thursday, we have medium impact news at 5 p.m. Then lastly, on Friday, we have high impact news, CPI, during the 8:30 open, and then during the 9:30 to 10 a.m. opening range, we will be having more high impact news. So probably on Friday, I will be trading after the 10 a.m. medium impact news release because we might have a lot of chaos during that window from the 8:30 open to the 10 a.m. New York time. So today and tomorrow, anytime after 9:30 New York equities open, we can hunt for some moves to the upside. So that is all for my weekly outlook, both technically and fundamentally. Uh, Remember that we are in a government shutdown, so we are currently trading with a lot of carefulness because anything can happen and anything can happen. So yes, thank you for listening to this weekly outlook. If you have not subscribed yet, kindly subscribe, and you can join my Telegram channel. I will put that link in my description as soon as I finish this video. So join my Telegram channel. I will be posting my signals there, and if we get a move to the upside, I will be posting the signals. The signals will include a stop loss, take profits, and probably the amount of size you should be entering the trade with. So yes, thank you for tuning in.